Hello ladies and gentlemen, and welcome back to the YouTube channel. My name is Trader Nick. I make tons of educational Forex trading content here on YouTube. If you're new to the channel, I definitely invite you to scroll down, take 2 seconds to subscribe to the channel. I make tons of content, like I said, to help new and experienced traders learn more about the financial markets. So if that would be something that would help you, make sure you hit that subscribe button so that you can get access to future videos, as well as a lot of the live streams that we've been doing where we take a look at the charts together. So if that interests you, make sure you hit that subscribe button down below and also like the video. So today we're going to be talking about bullish and bearish engulfing candlestick patterns and how you can use them somewhat to make a Forex strategy where you can find potentially good entries in the market. So the first thing I like to do often when I'm taking a look at a candlestick pattern is to first identify the logic behind it, right? Now, a lot of times, people will just show you the candlestick pattern, but they won't tell you maybe why it has validity. I like to identify the first thing is why that candlestick pattern might actually be useful. So now let's take this scenario. We have a big move to the downside in the market. We're going to show first the bullish engulfing candle. So we have 3 red candles in a row, or some number of red candles in a row, where the market is bearish, right? And suddenly we get this. We get a huge, overwhelming candlestick to the upside, right? And what this does is it totally engulfs. You can see the name coming into play already. The bullish bar here totally engulfs the previous red bar. The entire body of this red candle has just been entirely engulfed by this recent bullish move here. Now, what that signals is it signals a sharp, very strong rejection by the bulls at some level, right? So we have this level in play where price came down and immediately rejected or bounced off of, and the bulls gained some strength here to the upside. So really, it's a very clear candlestick pattern. It is the idea that at a certain level, price has been very sharply defended by the bulls, and there's a good chance that because we completely closed above and beyond this bearish candle, there's a good chance that the bulls are now in control and we could see some continued upside, right? That's the whole idea of this candlestick pattern. The idea is to find points where there's heavy buying pressure, where we can often see some continuation off of that buy pressure. That's the idea behind this strategy, guys. Now let's go ahead right ahead and take a look here at a good example. Now, of course, I am going to be cherry picking a little bit to identify some good examples for starters so that you can see the candlestick pattern in action. So we have a good example here. I will tell you up front that no strategy or entry is going to be perfect every single time. Of course, there are no guarantees in trading. However, this one tends to be pretty good. So what you get here is, look at how we have this movement to the downside, right? Now, if I make that red just to keep things clean, you can see we have a move to the downside followed by this huge green bullish candle, right? It's totally engulfed. You can see if I get my drawing tool here, you can see we totally engulfed the candle behind it, right? Completely, the whole body of this one was completely, encapsulated by this green bullish bar, and sure enough, we do get that continuation from there to the upside. So how could you have traded this? This is going to be the simple strategy. Now, feel free, as always, to deviate, and make it your own, but this is kind of the textbook idea of how you can often trade a bullish or bearish engulfing candle. In this case, we do have a bearish engulfing candle, and here's how you could set it up. What you would want to do, and I'm even going to use one of what I'm Trading View's cool little tools here, if I can find it. It's the long position. Oh, there it is. Okay, so what we're going to do here is, when you identify that the market has formed a bullish or bearish engulfing candle, what you can do is you can do something like a 2-to-1 risk to reward. And what you can do is you can put your stop just below the previous bar's low, right? And then you can make a 2-to-1 risk to reward. Now, if we go here, If we zoom out and make that so a little bit smaller, this tool is called, like I said, the long or short position is available over here on TradingView. If we make this a 2-to-1, you could see right around there, we would have had a nice opportunity here to take the market long and make a profit there. So that's the simple strategy, guys. What you can do here with a bullish or bearish engulfing candle is you identify, right, that you have a bullish bar here, a bullish engulfing candlestick pattern set up. Then you can set on the next bar open, you can buy or sell the market, appropriately, and set your stop, if you like to use a stop loss, just below this bar's low point, and then maybe go for something like a 2 or 3-to-1 risk to reward. In this case, you could have probably even gone with a 3. Well, you barely missed out a 3, but almost a 2.5 would have worked to 1 risk to reward ratio, right? So you got that nice follow through. Now, right away, we can see another good example here. Look at this. This is a little bit, less clean of an example, but it's still one nonetheless. If we identify that the market has been going up this time, right, this could be a potentially bearish engulfing candlestick pattern, right? Let's see how this one would have worked out, right? Of course, it looks very good, and not all setups are going to be so perfect. But you can see this is our bearish engulfing candlestick pattern. It completely engulfed the candlestick before it. We were going up, and price rejected sharply there and closed very bearish, showing some potential strength to the downside continuation. So if we were to follow our rules that we just set, we place our stop just above the highs there, and you set a maybe if you like 2-to-1 risk to reward, you could go for something like that. Kind of up to you, kind of up to your own trading strategy. But if I were to trade one of these, I would look to do something like a 2-to-1 risk to reward, right? We have that bearish rejection here. We have that bearish engulfing candlestick here. So it's a good chance that the bears could be potentially in control here. So you set your risk and you go for something like a 2-to-1. And sure enough, look at how you had the market move nicely there. Now, like I said, it's not always going to work out this nicely, but it really can be a great candlestick pattern to identify, if you like to trade reversals, but you like to wait for some sort of confirmation. A lot of times a bullish or bearish engulfing will give you a good setup. It will give you a good idea of the market. So if we look around, maybe we can find one more example. Maybe we can even find one that doesn't work. There's one, of course, right there. You can see that's a bearish engulfing. That's another one that worked. Now, you're not always going to get them to work right. As I mentioned, nothing is going to work 100%, of course. There's another beautiful example right there. You can see bearish engulfing. This, you can notice that it really does work quite often, and it works often enough that if you know what you're doing, you can definitely make nice profits. Now, you can also combine it. One thing that I know a lot of people like to do with this is they like to combine it with a trend filter, right? So they'll only take shorts in a downtrend and longs in a uptrend. I'm sorry. So, for example, we have a downtrend here. You can identify two bearish engulfing movements. You can see one there. You can see this bearish candle engulfed the candle before it, and you can also see it happening again there. So you could have combined it with that trend continuation idea to potentially set a couple things in your favor. And yet again, we get another example right here, right? There's another bearish engulfing candle where you're getting these beautiful moves. And unbelievably, there's another one just in sight here. So you can see it really does tend to have a nice, a nice signal in the market that there's a good chance of continuation. Here's one that didn't work. Take this. See, this is where you had a bearish move here and it engulfed the candle before it, but it didn't quite work. If we set our sell, our stop loss here, we would have been stopped out right there, and we would have lost that trade. So nothing is going to work out 100%, guys. I hope that makes sense. But as long as you win often enough, here's another example. As long as you win often enough, that is all that you need in trading. You just need to define some sort of edge, get your trading down to a point where you can win often enough to net a profit. And that is where, you can really build some long-term consistency in your trading. So I hope this helped, guys. As always, this is just another trading tool that you can add to your toolbox. I hope it helped you. If it did, let me know down in the comments. What is your favorite candlestick pattern? If it's not bearish or bullish engulfing, what is your favorite currency? Your favorite candlestick pattern. So let me know down in the comments, guys. Make sure you hit that like button on this video, and also if you are new around here, hit that subscribe button and support the channel. Thank you guys so much, and we will see you on the next video.